Looking at the S&P 500, and the main news last night was about the Fed's meeting and about the bond buying purchases that they do each month at $85 billion, and they will continue to do that, but one of their key indicators is the employment. So strong employment in the US would be a key factor in reducing that bond buying, and there is employment figures coming out tonight in the US, so they will have more bearing than normal. We also have employment figures 11:30 in Australia too today. So looking at the S&P 500 here, let's just drill into this a little bit through here. We're looking at a reasonably positive sort of structure to the upside, and with the levels here, the 1650 is the medium level. So we've seen the arrival, a small reaction, and we're looking for the first high above the level. But I don't think that's the end of it. Do you know what I mean? I think from counting from the 1600 here in a five-wave structure would be the one, the two. It seems to be third wave still coming up to this area through here, a fourth and a fifth, and of course this may not come all the way back down through here, but we're looking for that first high above the level, then a corrective move here, and then further upside towards the 1672 there. But all positive. This is just a sort of finer count here if you're counting this. So from the 1600, looking for five waves up for the one, back for the two. And then the third wave here, this little guy here, we're looking for five waves. So we're looking for the one, the two. I think this is all the third wave to here. A fourth wave has got to come into play, and then the fifth wave to move up higher through here as such. So it's still unfolding as such to the upside. So look, we've been on the right track. We've got all our long trades in, and it's positive. And what we're really looking for is, some type of, there is a small correction here. That's fine. It's got support. That's very promising. That's great. But we also should be mindful of a larger correction unfolding here as well. Once that happens, then of course we'll be looking for support there and further upside still. And this is if you're day trading, then you'd be on the 15 minutes or 5 minutes or even tick, whatever. But this is obviously pushed up a little bit sort of higher through here since I've been doing it. But just sort of out of this as well is that just for a bit of sort of education, I guess, this 50 here is obviously the medium level. Then the 53 is the next really level that you would want to be looking for long trades on. So because it's like a little group one from that point. And then the next level up is the 5, and then the 8, which is 8 is the profit taking number, and you can see that coming in here and here. The other important little point here is that the 1661 here is the 78.6 Fibonacci retracement level. So we can expect some sort of resistance at that point. Well, let's just say the 1660. Normally, of course, the 1660 would play out if you're trading long anyway, but in this case, it may just have a bit more impact than normal, because normally we include it, of course, but we normally look at the 65 and the 72 here, but we are and would like to look for another top here before we see look just in the first high above the level. So wherever that may go to, I'll need to pull this apart to have a look inside of that. This would be the same for the Dow Jones on the 15,300. So the 300 is a minor level, and we'd be looking for support there. Now, we'd also be looking for corrective activity through here as well, because a nice solid support on this would get us to this level up here. You can see probably over here we've got the arrival, the reaction, the first high above the level, and then support on here, and then moving up to the 5. That's the normal sort of picture that we'd be looking for here. So, but look, the other side too, this is moved up, past the 61.8% retracement level of this move down through here. So, it's a high probability that that we can continue to the upside Well, until the Feds mention any reduction in the bond purchases. So once again here as well, it hasn't got tested support on here just yet, has it? It's trading above, but it hasn't got that, that sort of coming back and testing it, and then breaking up. It hasn't got that yet through here. It's just got the first high above the level here. So be a bit mindful of that, even though that we're looking at this being a wave 4, either to here or to here and then further up through here. All good though. It is corrective, and we should expect further upside there. Right. Pretty much the same with Europe as well, just on the FTSE here, and just cutting to the chase on the intraday here. The 65 level here, nice corrective price action through here. Next step through here. We can see that this has got an impulse wave through here. We want support on the 65.30, the top of group 1, so that's what you'd be looking for there. The Australian market, we'd seen sellers come into the market yesterday. If we look into the daily chart here for the XJO, the cash market here, we can see that we got higher volume than yesterday. And obviously this has been sold off here at 49.50. So sellers are in control here. So it will be very interesting today to see what follow-through volume comes into this market. So I just see this as profit taking. If that close was lower than the open here, then the sellers would be in control of the market depth at that stage. But that's not the case, so it's just a bit of light profit taking, and it brings it into the 4900 here. So we can see a corrective pattern across here. So this is pretty much the standard classic trading levels pattern, where we have the arrival, the reaction, the first high above the level, and then the A, B, C correction. Yeah, and then we see further upside. So this here, look, yeah, you want to be above 49 to be trading on the long side. The next step up, of course, is to build the trade through the group 1 here, and if you get support on the 49.30, then we can go up from that point there. We are looking for further upside towards the 5,000 there. And look, it can just go through that as well, but it's just been a price point that we've been looking at and tracking the wave count up. But as it stands at the moment, this is a 3-wave structure here. Well, it becomes 3 waves as soon as we take out that top there. So that would be this top here, but we could also use something like this as well. There'll be problems within here, so if this can climb on the other side there on the 49.20, well, then you can move from that point there. Got to be careful about Thursdays. For some reason it can open higher and then trade lower for the day. If it trades lower for the day, as long as it trades on lower volume than yesterday, then we know that the sellers aren't flowing in from that side. It's just more profit taking, and stops being triggered as well, because that can really sort of send the market quickly to the downside. Okay, let's have a look at commodities. Okay, starting with gold, with following our little C wave up, and as you can see, the support's coming in quite nicely on the 1250 through here, so that's good. This pattern here, we just talked about the classic trading levels pattern. This is the other one called the overshoot pattern. There's really only two, the way I see it is just trying to simplify things, is there's only 2 things that can really sort of happen at a level as such, besides not stopping and complete failure. But the pattern across the level is normally the classic trading levels pattern, but the other one is the overshoot, where it just goes straight up through and doesn't react at the level, just goes straight up through and runs out of steam, and normally the distance above will be the distance below, so as a balance point, and the number, closest largest number, in this case 1250, becomes the balance line through there, and then it's just a matter of finding that as a support there. So look, it's come back down and tested support. Let's move in and have a closer look. Wrong chart. Okay, so I mean, that fifth wave could be finished there as well, so just need to be a bit mindful of that. But while it's trading above the 1250, then it's positive, and stops would go under this little area through here. If it was going to have a correction from this point in terms of coming down like that from here, then the retracement would be back 61.8%, and then we'll have another move down through here before we see any sort of further upside. But you know, that's a tested support now, so that's where the stop would go if you're going to go long. You just got to work in a way. It's a little bit. Eight's not really a good number to go into because it's a profit-taking number as well. So let's just have a closer look in here. The 1250 is obviously the first important point. The second one, if the 1255 comes back and gets retested, then take it from that point there and have the stop under here. But the main point is that it does appear to be remaining positive through here. So while it's above this level, trade long. Let's have a look at silver while we're here. Okay, this is a bit better picture here as well, because it's better because not because of this three wave correction here and this impulse wave here being under this one here, but also in here as well we've got a corrective pattern through here. So we've got a nice sort of accumulation process going along the 1900 here. So so we can expect to see further upside from that. Normally, if we're looking at from 1900, then we'll be looking at Group 1, which would be the top of Group 1, which would be 1930. So perhaps a tested, tested, because it hasn't really, it hasn't found support on this level as yet. But all this poking up here is suggesting that there will be, that will come, and we'll see further upside there. So a retested support on that 30 would be good. The copper market here, we're looking at this moving higher as well as what we were talking about yesterday. I've got this alternative A, B, and C here because the move down through this is still in three waves. It's more positive to the upside, and as I mentioned yesterday, the long as it stays above the 305, we'll treat it as a positive move to the upside, and base metals being in line with gold as well as precious metals, another metal of course. As I mentioned, we would be expecting resistance at the 8, which we've got, and we'll get resistance here as well at the 10 here. So we expect a correction across here and further upside from that point. The oil market is chuffing along quite nicely as well. It's all positive, so there's just a couple of different ways to count it. This is the way that is counted on the chart. So this particular structure is still looking for this third wave here, and then the fourth wave here, which would pull back to the 38.2% of this wave 2 here, if that was the case. So that's why I've got that sitting in around this 102 area here. But at the same time, and I mentioned yesterday, this trend up here is trending higher, and it's expanding. The other way, this is just an intraday count here. So I've got two different counts really, but they're all sort of positive, and this is the one that we've been working with in the day ahead report here, and we're looking for a little wave 1 up here, wave 2 here, up for wave 3 here. That might not be correct there because I can count here the 1, the 2, then 1, 2. It's like the third wave here, but it does appear to look like a fourth wave here. This can be, let me just have a look at this. This is up for 1 here, back for 2 here at this point. Then we've got 1, 2, 3, 4, 5. So we've got 1, 2, 3 here, back for the fourth. And then we've got this move up here that's not complete yet because it's still in 3 waves, the 1, the 2, the 3 here. But we don't really want to see it coming back down here. The 106 is normally quite important, but for me it's always the 106.50, which is a 65 number, 106.50, and it works well with oil, especially oil actually. So Yeah, well, this 106.50 here is what we're looking for as support. If you get support on here, it's kind of important because it's the halfway point, it's the midpoint between the 5 and the 8 here. So support on this level here, once again, we've got the arrival, the reaction. We'll look for the first high above the level, then an A, B, and C across here. After that, if it gets support, then you're pretty much assured of getting to the 108. The 107 is important, of course, and there'll be orders there, but it's the 107.20 that you'd be looking at, and then the 50 here in there. So you could just a matter of breaking it all down again. It's always the 1, 2, 3, then the 5, then the 8, so to speak. The major price point as a target is the 110 up there, and that's the first minor level above the 100. So these are all sub-levels now, and this will be the first minor level here. And a breaking above the 110 in the bigger picture, in the daily picture, basically creates this whole move up through here as a very powerful third wave going up. Technically that's what it will be when it's up there, but if you've been trading this here, you'll just be looking for long positions. I mean, it depends on the degree of structure that you're trading, where you take your profits and what you do, of course. So yeah, that's that. FX. So the US dollar here, we've got that reaction at 85, and as mentioned yesterday, we were looking for basically, if we were going to get a little high above here, then we'd be looking for the ABC across here as such. But also mentioned that it can fail from here, and then we'd be looking for it in this particular case here. So that's what we're looking for there. In this current move down on the 30-minute chart here, it's still impulsing down. There must be some other news coming out because I've just missed this little bit here, but we can still see that this is an impulse structure to the downside, 4 and 5 down through to here. So it'll be interesting to see where this low is here. Once this low is in place here, then we will see the corrective price action from this sort of area through here as an ABC back. But because we've basically got 5 waves down through here, because we've got 5 here, that means it will get another 5 over here as such. So we're looking for a larger correction through here, and that would be the same with the euro as well. And when we were looking at the euro yesterday, from this low point here, we understood that it can rally back off the 128, and that's sort of what we were looking for. And the strategy was that if the price was above the 128 is to basically be long. How far it goes back was a little bit questionable, but I understand from the levels that if a market comes back up on the 128, then it'll be looking at the 130 through here. But I think one of the interesting aspects here is that this is impulsive price action up through here. So after it can move higher. That's what I'm saying from this point. I need to pull this apart a little bit more. But what we can expect through here, though, at the 130 is the normal corrective thing. So even if this goes above, let's just say it goes up to this little area here as such, then it will still have its corrective price action across here, and you'd have to wait for that. And then once you can see support here, then move up from that point there, and also use group 1 as well. So the top of group 1 would be 103.30 sitting at this point here. And the range should stay. This 130 would be the balance line, and group 2 here would be the support, and the resistance would be group 1 up through here. So you can either trade long now and keep the stop way down here, or allow this to play out through here. So it will either react here first and have its 3-wave price action, or it will do the overshoot pattern and move straight up and then come back down and test it and take it from that point there. The Australian market as well, just on the 4-hour chart here, it's going pretty much according to plan. We didn't get support on the 92 yesterday, but I still think that we're in this sort of, this this particular corrective pattern to the upside through here, and as you can see, the price action has moved down to 91 and then moved back here as well. So support on the 92 would be right. So we can pretty much put that little B wave now in here, but to confirm that, we would need to see a price above this move above here. So if we can drill into this for a second here somewhere, just bear with me while I find the right chart. This is the 15-minute chart here, so this will do. So we were looking for possible support up here. You know that if support is found on top of group 1, well then it separates itself psychologically from the closest largest number, the 92, and we'll see further upside. That wasn't the case, so we're looking at this being the B wave down through here, which is in the three waves of the A, the B, and the C. It's just the later part of it just happened very quickly, and this is happening as well. But this seems very impulsive to the upside here, so that would be up for 1 and back for 2 in here in a series of wave 3s up here. So we would end up seeing some structure like this. Well, the 1, the 2, this is like the whole third wave up here, the fourth wave here, the fifth wave will probably make the first high above the level, then you'll see the A, the B, and the C here, and then you're looking for support over here on this one, okay? So that's the price action that you'll be looking for. But the good news is that because you've got 5 waves here, that means that we're going to get another 5 waves over here, over this side. So we definitely want to be long on this side here. So what we were talking about yesterday is what we're sort of looking for here today. It's just that things are in a bit more, in place a bit more now, that's all. Alrighty, well, that's it. So we do need to be a little bit careful with the indices, especially tomorrow with the employment figures for the US there as well, because that I don't think I've got it on this particular template, the indices. This will do here just for the moment. I mean, this is the S&P 500 here. This whole move up here can certainly be counted as, probably not the right labeling here, but as an A and a B and a C wave moving up here to complete this up here. So we can still be looking at a top of a larger B wave up here, and then to the downside after that. So we do need to be mindful. So as we get up into this, we're tracking this little 1, 2, 3, 4, and 5 up through here. Once those 5 waves are in place there, then we really need to reduce our long positions, and that will also leave the ASX sort of closer to the 5,000 area or up there sort of somewhere. So it's a point where yes, it could continue to keep going, but in one way or another you really need to protect what you have at that point there. So you could take a balanced point of view and perhaps use the weekly low with a lot of stocks, or take extra profit, because if the market's going to move higher than 5,000, well then we'll also have time to reposition ourselves as well, and that would be having support on the 5,000 as such. So if we look at this here just for a second, is that we know that this is the XJO, of course. We know that this is all risk area in here. This is where it can fail. So the idea would be to take profits as close as we can here, and then if the market moves higher and then reestablishes itself with nice support here, then then we'll just look in getting in from that point there. So it's not like we're going to miss much. It's more of a case of protecting ourselves from this point, because it can fail from here and also on the US markets as well. So we just need to navigate through that. So there'll be a bit of sort of iffiness around all of this, and unless we can get it really sort of clear. But at the same time, it's important to stay with the trend, and this move up through here can be a larger structure to the upside as well. So in terms of something like this here. So up for the 1 here, back for the 2 here, over here, because we know that's a little ABC correction. So it can be building up through here. So, we just need to be sort of mindful. If we do get 5 waves here coming up through here, well, then we've got a different picture. We'll have a 3-wave counter trend across the 5,000 here, and then we'll have another 5. So 5 waves up here will give us another 5 waves up here. So it's just this little juncture in here that we've got to get through this space here. So, and that's approaching next week. So yeah, anyway, just be mindful of that, and we'll chat about that as we move through it and it unfolds. Alrighty. Well, good luck and good morning, and enjoy the day ahead.